What is going on? Welcome back to Financial Journey. So today I want to talk to you about Healthier Choices Management. I want to go over the recent news that just came out, break it down what it means for HCMC and also HCWC. So I'm going to go over all the things that you need to know, but first make sure to hit that thumbs up. And with that, let's get right to it. So starting off, as far as SEC filings, there was this that did come out on July the 24th, so an 8K, kind of matches this right here, so this news. So it says HCMC announces the acquisition of Greenacres Market with 5 stores located in Kansas and Oklahoma. So pretty small PR because it's kind of just this right here. But in essence, it doesn't actually state how much they paid for it. So that was kind of a little bit more of a red flag. It does say right here, based on their past success, we anticipate the Greenacres acquisition will propel annual top-line revenue to roughly $75 million. So it is fair to assume, given a very low multiple, that they paid at least on the low end, $100 million. So that's kind of fine and dandy. But if you think about it, my immediate thought was, how the hell did they pay for this? Based on their last earnings, which is up until the end of March. So they haven't submitted their Q2 yet, but they do have right here $3.9 million in cash and cash equivalents. And even when I did a video all about this, which I think came out like last month or whatever, but still $3.9 million in cash and cash equivalents, and they're burning through roughly around $2.8 million from operations right here every single quarter. So you don't have to be a genius just to kind of look and say, well, the math isn't mathing. They're basically needing money now. So this is why I alluded to in my previous video more of a reverse stock split occurring with HCMC. And this is kind of the history of their reverse stock splits. So they have done quite a lot, nothing recent. So the last ones were in 2016, 2015, 2013. The last one was a doozy, a 1 for 20,000. So if they do another one, then most likely it'll be on the same kind of ratio. But still, beside the point though, based on this, they don't have that much money. It doesn't make sense for them. How can they do this? Obviously, they're going to be doing a spin-off. So if we look under the actual SEC's website for HCWC, you see 2 S1s that were submitted on the 25th. Kind of interesting timing, mind you. So the 25th, and this news came out on the 24th. So kind of just take note of that. But in these documents, so this is the 5th and this is the 6th update. In the 5th is more so just Q&As and just kind of going over the current circumstances. The 6th one, this is where they show and indicate a registration of 400,000 shares. So it does indicate right here a total of 9.8 million shares, which is comprised of 2.7 million in Class A and then just over about 7 million in Class B. So yeah, pretty interesting stuff. But keep note that this has gone up dramatically from basically the first S1 right down here. This was, I think it was like 2 million, 2.08. My mousemanship is absolutely horrible, but you guys get what I'm saying. They have been diluting quite a lot through HCWC with it not even being spun off. So it's not the best. And plus also on a side note, they did issue that whole preferred convertible stock, which from what I did a video all about, is absolutely detrimental. So not only is this company mismanaged and many different things, but they are starting to kind of dabble with toxic debt. There's numerous companies that I have dealt with that have this convertible notes, whether it be notes or preferred stock, any convertible aspect is very detrimental because the lower the stock price, the more shares are converted, thus pretty much killing retail investors' equity and just equity in general. So all in all, not the best. In this 5th update though, it does state right here the spinoff will be effective. It still does say 2024. So it is going to be in the next, 5 months, something like that. So it does allude to all of this. As I said in previous videos, they have to give roughly around 30 days for a new record date. And it'll be very interesting to see what their new ratio is. I believe the previous was 72,000 to 1. So 72,000 shares of HCMC equals 1 share of HCWC. And so when it comes down to that, HCMC has since diluted as has HCWC. So it'll be very interesting to see their ratio that they do pick. And even aside from that though, like the whole preferred or the class A and class B, that's going to be a very unique circumstance because remember, it is a 20-80 split. So 80% is going to be moved to class B and locked in for 90 days. And then class A will be able to be interchanged. They still do state in here that they're going to be doing a $10 IPO, and this is where they expect it to be between, so $9 and $11, which is kind of crazy because in previous documents, as I mentioned, these ones more specifically that were submitted in May 2020, or yeah, May 24th, 2024, they allude to it, them kind of forecasting like a 60 to 80% pullback pretty much immediately upon IPO. So it's interesting to see that they're anticipating more of a kind of a pump because obviously $11. But yeah, it's a very, very unique circumstance. So lo and behold, this is why they did register more shares under HCWC. So they're already tacking on debt, acquiring businesses under a name that isn't really spun off. So it's a very fine line. I'm not a lawyer, I'm not a financial advisor, but that does seem borderline very, very fishy. That's like me making a business and kind of just moving a lot of my debt to that business and acquisitions under that business, but still keeping it under HCMC. It's a very, very interesting scenario. So I don't know if anyone has some context to that to see if they are eligible and able to do that. Because as far as I know, the hierarchy, I think they are still keeping HCMC, and I don't know right now if HCWC is a subsidiary and that's how they're able to do it before the spinoff. Still, it's over my head for that, but still, needless to say, it shows that they are not really managing their business accordingly. And it's still referring back to the news that came out in August 2022. They anticipated for HCWC to be instantly profitable. And based on their earnings, I don't know. The math isn't mathing. Doesn't make sense how they anticipate it to really be spun off. So yeah, even the grocery sales. So this is just on a quarterly basis. So let's say they do 75 million in revenue per year, this new kind of company right here, so Greenacres, like logically you're adding another 20 something million arguably every single quarter. So yeah, they definitely are good, but at the same time, like all their other expenses would just be going up to the moon, and thus kind of just making this net loss just so much worse. So all in all, this is a very unique stock. I don't think anyone has ever seen this type of thing. And I know a lot of kind of crap goes on with OTC companies, but this is kind of next level. So let me know your thoughts. On a side note, like I've kind of alluded to even in this video, if they do not do the spinoff within the next quarter, they are going to need to do a reverse stock split of HCMC and have a very, very high ratio just to pretty much milk it for whatever is left. So don't forget to hit that thumbs up. Have you been buying HCMC? And if so, this is probably a very important point. Why? Why are you buying HCMC? Are you more optimistic about HCWC? Have you been in their stores firsthand? Is that why you like it? Or do you like the management? What's your thoughts? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And one final thing, take advantage of this promo. Simply sign up for a new account, throw $100 at it, and they give you 5 free stocks. Each stock is valued up to $2,000. Only up until July 31st to take advantage of that. Link in the description below and also the comments. With all that said, appreciate all of you watching.